The stock market scares people. They think it's risky. They think you need thousands of dollars. They think it's only for rich people. None of that is true. Today we're breaking down exactly what the stock market is, why wealthy people use it, and why you should too. By the end of this video, you'll understand how stocks actually work and why the stock market is one of the easiest ways to build real wealth. The stock market isn't some mystical casino where money disappears. It's simply a marketplace where people buy and sell pieces of companies. When you buy a stock, you own a small piece of that company. When that company makes money, your piece grows in value. The average person thinks the stock market is risky. The truth is riskier than the stock market is doing nothing. Inflation eats your money at 3% per year. If you have $10,000 in a regular savings account at 0.01% interest, you're losing money every single year to inflation. The stock market historically returns 10% per year over long periods. That's how you actually beat inflation and build wealth. You don't. You can start with $1. Apps like Robinhood and Fundrise let you invest fractional shares, meaning you can own a piece of expensive stocks with just $100. The barrier to entry is gone. The real barrier is knowledge, and you're getting that right now. The stock market is only risky if you trade stocks like gambling. Buy and hold is not risky, it's boring. And boring is how you get rich. Real risk is putting $10,000 in a savings account earning 0.01% while inflation steals 3% per year. That's losing money guaranteed. The stock market might go down 10% in a bad year, but historically recovers and goes up. Over 30 years, you're up to 100 to 300%. When a company goes public, they sell shares. If a company is worth $1 billion and has 1 million shares, each share is worth $1,000. You can buy one share and own one of 1 millionth of that company. As the company makes more profit, your share becomes more valuable. Some companies also pay dividends. They share their profits with shareholders. This is passive income. You own the stock and get paid quarterly just for owning it. Wealthy people don't get rich from their salaries. They get rich from investing. A doctor making $200,000 per year stays middle class. A teacher investing $500 per month in stocks for 30 years becomes a millionaire. The stock market is the fastest way to build wealth without starting a business. You don't have to do anything. You just own pieces of companies that are already successful. For individual stocks, you pick a specific company like Apple or Microsoft. This requires research and knowledge. For beginners, skip this. For index funds, you own hundreds of companies at once. The S&P 500 tracks the 500 biggest companies in America. You buy one fund and own pieces of all 500. This is what wealthy people do. For ETFs, exchange-traded funds, similar to index funds but trade like individual stocks. Low fees, instant diversification. For beginners, buy index funds or ETFs tracking the S&P 500. VTI, VU, SCX. All are excellent choices. They think they have to time the market. They wait for it to drop. They wait for the perfect moment. Meanwhile, time passes and they miss out on compound growth. The best time to invest was 20 years ago. The second best time is today. Dollar cost averaging means investing the same amount every month regardless of market conditions. Market up, you buy less shares. Market down, you buy more shares. Over time, this averages out and you win. Invest $100 per month for 30 years at 10% return and you have $400,000. Invest $1,000 per month. You have $4 million. Time plus consistency. Wealth. Open a brokerage account on Robinhood, Fidelity, or Fundrise. Takes 10 minutes. Then buy one index fund, VTI or VU. Set up automatic investing so $100 goes in every month. Forget about it for 30 years, you're done. Don't check the balance daily. Don't panic when it drops. Rich people built wealth by being boring. They invested and forgot. That's the secret nobody tells you. If you're 25 and don't invest, that's 40 years of missed compound growth. That's literally millions of dollars lost. If you're 35 and invest, you have 30 years. Still millions. If you're 45 and invest, you have 20 years. Still significant. The worst time to plant a tree was 20 years ago. The second worst time is today. Start now. If this video opened your eyes to the stock market, subscribe to leverage your money. Every week we break down exactly how to grow, protect, and leverage your money so you can build real financial freedom. Drop a comment below. What's stopping you from investing? Is it fear, lack of knowledge, lack of money? See you in the next video.